At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, December 29, 2022, dear Mullen stock fans, mark your calendars for January 19th. Mullen is rising on hopes it can execute a reverse stock split next month. Mullen Automotive will try again to get approval for a reverse stock split on January 19th. The company has been hiring experienced executives and hopes to avoid delisting. Mullen needs a lot of cash to fund the production of its electric vehicles.
Mullen Automotive, Nasdaq MULN, a troubled electric vehicle company, will try to execute a reverse stock split on January 19th.
An attempt to win shareholder approval on December 23 failed for lack of a quorum. Most shares that were voted supported the proposal, but the vast majority abstained. Mullen has until March 6 to get its stock price above $1 per share or face delisting. But it could get a 180-day extension. On December 29 the shares were trading at about 23 cents. The price of failure. Mullen says the reverse split could be anywhere from 1 for 2 to 1 for 25. The last would get the stock's price to about $5.75 per share. Mullen's market capitalization is about $400 million. In addition to March 6, Mullen faces a May deadline to remain part of the Russell 2000. Mullen was added to the index last June, which helped the stock trade as high as $1.46. The problem, as I wrote in May, is that Mullen lacks the cash to deliver on its promise of a mass-produced electric car. Since June it has made two major acquisitions of bankrupted companies. Bollinger Motors, which had brought a promised plant to Mississippi, and Electric Last Mile Solutions, which had brought a promised plant to Indiana. Both plants need cash to get into production. Mullen had just $61 million of cash in June. It bought ELMS after raising $150 million from existing shareholders. CEO David Michery, a former music executive, has been showing off a high-end electric vehicle called the 5 and continues to promise production real soon now. But he has also been selling his own stock. This does not inspire confidence. There remains hope, which is why Mullen was up 10% in early trade on December 29. BlackRock continued to buy Mullen stock in the third quarter. The company has made deliveries of a vehicle called the Igo in Europe. The company recently hired two executives with experience at General Motors and Ford Motor, respectively. This led fellow Investor Place contributor David Modell to recommend you buy it when it gets over $1 per share. What happens next? Mullen needs cash in a market that's collapsing. All auto stocks are down, especially those selling electrics. Big auto companies from GM and Ford to Germany's Volkswagen and China's BYD are all preparing to take on Tesla. And Mullen cannot afford to fall behind. Absent a reverse split, I doubt you'll see Mullen stock get anywhere near Modell's buy target. Director Kent Puckett just sold off Mullen stock. Expect volatility with Mullen stock as traders weigh a possible reverse share split. Mullen Automotive held a shareholder meeting to decide on a possible reverse stock split, but that meeting was adjourned without a vote taken. An SEC form indicates that a director at Mullen sold off his entire stake in the company. Mullen stock opened 8% higher this morning. Today's traders have a lot to consider when it comes to electric vehicle manufacturer Mullen Automotive. For one thing, a company insider has reportedly divested his stake in Mullen stock. Also, an important meeting, in which Mullen Automotive shareholders were to decide on a potential reverse stock split, was adjourned to a later date. First things first, Mullen Automotive director Kent Puckett sold off his share position in the company. We know this because of a Securities and Exchange Commission Form 4 filing. Apparently, Puckett sold 100,000 Mullen stock shares at 33 cents apiece on December 15. As we'll cover in a moment, the share price went down after Puckett's sale. Is it possible that he knew something was amiss at the company? That's a question for Mullen's stakeholders to consider, but bear in mind that people sell stocks for many reasons. After all, it is December and that means it's tax loss harvesting time. So, let's not jump to any hasty conclusions. What's happening with Mullen stock? Mullen stock jumped 8% immediately after the opening bell rang on Wall Street today and then pushed a bit higher. Even with that, though, the shares traded below Puckett's 33-cent sale price. It's also worth noting that Mullen Automotive shares are far below the crucial $1 level. That price point is significant because, as Eddie Pan observed, March 6 marks the deadline by which Mullen stock must trade at a minimum closing bid price of at least $1 for 10 consecutive days in order to remain compliant with NASDAQ guidelines. To help remedy this problem, Mullen Automotive held a special meeting of stockholders on December 23. On that day, Mullen's shareholders were to vote on a possible reverse share split, with a range between 1 for 2 and 1 for 25. A reverse split could raise the Mullen stock price above $1, thereby solving the NASDAQ listing compliance problem. However, the special shareholder meeting was adjourned without achieving a quorum on the reverse stock split vote, so the motion failed to pass. This definitely isn't the end of the story. The special meeting of Mullen's shareholders will reportedly reconvene on January 19, 2023. So, mark your calendar for that date and be on the lookout for further developments with Mullen Automotive. Mullen stock heats up as cost to borrow rises. Traders must consider the bigger picture. Embattled EV manufacturer Mullen Automotive popped higher on Thursday. Social media chatter erupted regarding a possible short squeeze opportunity. Prospective traders of Mullen stock should consider all key data points. Offering no shortage of talking points, electric vehicle manufacturer Mullen Automotive jumped dramatically higher on Thursday. On social media, bullish traders of the embattled enterprise discussed the possibility of an upcoming short squeeze. While some of the evidence is compelling, it's important to consider the wider narrative. Still, the excitement spiked Mullen stock nearly 9% up in the early afternoon session. Specifically, Fintel notes an extraordinary rise in the short borrow fee for Mullen shares. Borrow fees refer to a type of secured loan which bearish traders pay to initiate their shorting activities. Per Finance Train, the typical fee for a stock loan is 0.30% per annum. In case of short supply, when many investors are going short on a stock, the fee may go up to 20 to 30% per annum. Per Fintel, when the December 27 session ended, the borrow fee reached 9.65%, in line with typical shorting-related dynamics. However, at the start of the current session, December 29, the fee hit an extraordinarily high 156.76%. As of the latest print, this metric skyrocketed to a blistering 281.79%. Naturally, those with a contrarian view saw a massive short squeeze opportunity brewing in Mullen stock. In particular, social media users pointed to past correlations, reporting that prior borrowing fee spikes in other heavily shorted securities led to short squeeze booms. While it's quite possible that Mullen stock can rise substantially based on its undeniable appeal among dedicated retail investors, it's also fair to point out that the underlying business has been deeply embattled. Mullen stock requires a wider context. Fueling speculation toward Mullen stock is the possibility of an upcoming reverse stock split. As Investor Place assistant news writer Eddie Pan stated, a proposed reverse stock split amendment will likely pass. On paper, reverse splits may help beleaguered enterprises as such actions consolidate outstanding shares. Plus, Pan also stated that with exchange delisting and index inclusion as major risks, shareholders don't have much of an option here. Presently, Mullen stock trades hands at 23 cents a pop. NASDAQ requires securities on its exchange to trade at a minimum price of $1. Theoretically, then, this circumstance should boost Mullen. However, it's vital for prospective traders to realize that stock splits typically don't materially impact short sellers. Regarding reverse splits specifically, some evidence points to this dynamic acting like blood in the water and continuing to draw in more shorts to bet against the company. Limited data indicates that between 1 week and 3 months, reverse splits may spark negative outcomes for split-initiating businesses. Further, a graduate study research paper published by Utah State University revealed that for firms contemplating a reverse stock split, they should be aware that short sellers will likely place downward pressure on their stock prices. Finally, while short borrowing fees may be spiking, Mullen stock as of this writing did not qualify for Fintel's short squeeze leaderboard. At present, The investment resource state that Mullen's short interest stands at 10.83%, whereas its days to cover is 1.29. While significant, these stats are not remarkable compared to prior high-profile short squeeze trades. Therefore, extreme caution remains the ongoing theme for Mullen stock.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.